delighted to have you with us today as part of IOSCO's 2025 World Investor Week, an initiative that EFAMA has proudly supported for many years. This event is a great opportunity to highlight the importance of investor education and financial awareness, topics that are at the heart of many of the things that we do here at EFAMA. This year, we thought that the World Investor Week would be the perfect moment to focus on something very fresh and important, the European Commission's financial literacy strategy that was published just a few days ago. And to walk us through the key aspects of the strategy, we are truly honored to have with us Mrs. Maria-Louise Albuquerque, European Commissioner for Financial Services and the Savings and Investments Union, and the driving force behind this new initiative. Commissioner, thank you so much for joining us today and for sharing your insights with us. I think someone needs to mute.
No, yes.
You have very kindly agreed to present the main elements of the strategy and then engage in a discussion with our two panelists, Micaela Forelli and Denise Voss. Micaela, you are the CEO of M&G Investments Europe and Vice President of EFAMA. Denise, you are chairing EFAMA's Investor Education Platform. Thank you both for being here as well. Since we only have 45 minutes, I will immediately hand over the floor to Commissioner Albuquerque. Commissioner, thank you again very much, and the floor is yours.
Thank you. Well, good morning, ladies and gentlemen. And first, let me thank Tanguy and the entire EFAMA team for organizing this event and for placing financial literacy at the center of today's discussions. And the timing, as you mentioned, could really not be better. Our adoption of the European Financial Literacy Strategy comes just as IOSCO launches again its World Investor Week. I looked into some of the themes of this year's World Investor Week: digital finance, AI, and fraud prevention. These are key areas that capture the key trends shaping today's financial landscape. New and dynamic market entrants are making investing easier and cheaper. And while these developments help open up new opportunities, the use of digital channels and some of the related products also come with risks. Retail investors need to be equipped to navigate these new realities and be in a position to confidently make informed decisions. This challenge has been at the very heart of our work to build the Savings and Investments Union. As many of you will be aware, my services have been working very hard in recent months to deliver the concrete actions outlined in the SIU strategy. The Commission on the EU Financial Literacy Strategy, as well as our recommendation on savings and investment accounts, which were adopted last week, are just the latest building blocks. They will be followed by two further important proposals before the end of the year. The first one will aim at strengthening supplementary pensions, and the second one will focus on removing the barriers, both supervisory and cross-border, that continue to fragment our capital markets. But today, I am here to speak about financial literacy. I've said this before, and it bears repeating. Financial literacy is a key driver of economic strength. It starts a critical chain reaction from informed individual decisions to efficient capital allocation, which then fuels the growth and innovation that defines a truly dynamic economy. Financial literacy is often seen as a broader and less technical issue than many others in our strategy. Yet meaningful progress frequently starts with the most elemental changes, and this is certainly one of them. So today, I would like to take the time to explain our strategy and the benefits I believe it can bring, first for our citizens, but also for European companies and markets. Financial literacy is an essential life skill, one that empowers people to make informed decisions about their future. It should concern every citizen, not only those investing in capital markets, but all who wish to manage their resources wisely and plan with confidence. Financial decisions impact us daily, from more basic choices, such as deciding where to buy your groceries or what utility providers to choose, to more complex decisions, such as getting a mortgage to purchase a home or planning for retirement. Most of us will face all of these questions throughout our lifetimes, and even basic financial literacy training can help us ask the right questions and make better financial decisions. And making the right decisions can have a real impact on financial well-being and resilience, helping households plan with confidence and build great financial security. However, financial literacy is not a static skill. Our ability to act with confidence must evolve alongside the market itself. Just think of the changes we've witnessed in the past decade, or even in the last 5 years alone. Digital finance, artificial intelligence, and the rise of new technologies are transforming how people save, invest, and manage risk. These innovations bring new opportunities, but also new responsibilities for policymakers, for industry, and for every citizen navigating this rapidly changing landscape. Through our financial literacy strategy, we want Europeans to approach these changes with confidence, to understand new financial tools, recognize risks, and seize the opportunities that innovation can offer. Because in today's world, knowledge is not only protection, it is empowerment. This is the premise of our financial literacy strategy, which is built on 4 pillars. First, coordination and best practices. I want to acknowledge that a lot of good work is already being done. Most member states have put in place financial literacy strategies, and there are many very interesting and positive initiatives by both public and private stakeholders. We want to build on those efforts and ensure that the most successful approaches are being amplified across Europe. We will therefore strive to better link up the different stakeholders involved in financial literacy initiatives and enable them to learn from each other by facilitating the exchange of best practices. Second, communication and awareness raising. Financial literacy initiatives can only work if people know and engage with them. For communication to be effective, it needs to reach the different target groups where they are, and the messages need to be delivered in a manner that their recipients can relate to. We will launch an EU-wide campaign to build on and strengthen existing national efforts, supported by a new network of national financial literacy ambassadors. Third, monitoring and evaluation. We need to know what works. The Commission will continue to measure progress through Eurobarometer surveys and will encourage member states to develop tools to evaluate progress. The final pillar is funding. Ambition needs resources. We are encouraging member states to ensure efficient use of available funding channels, both at EU and national level, to support financial literacy initiatives and research that can address the diverse needs of the population. These 4 blocks of our strategy will mutually reinforce each other and together have the potential to make a real difference in the lives of many Europeans. But it is important to remember that this won't happen overnight. The full benefits will only materialize over time. That is why we must act now and turn ambition into action. The second part of the package adopted last week, our recommendation on the savings and investment accounts, is a concrete step in that direction. SIAs can be a powerful tool for citizens to put their financial knowledge into practice, turning awareness into action and learning through experience. They are meant to take away some of the complexity that could otherwise act as a disincentive to invest into capital markets. And they aim to make such investments accessible for all citizens, even those that may only be able to contribute with low amounts. The recommendation builds on lessons learned from existing best practices, which have shown how such accounts can meaningfully contribute to financial literacy, fostering a spirit of learning by doing. When I speak about financial literacy as a driving force in our economy, I see it as an equation. And apologies for a former professor of economics, old habits die hard. On one side of the equation, I see citizens building up a financial safety net and earning a good return on their savings. On the other side, I see an increasingly liquid European market for capital. In a moment when Europe needs significant additional forms of investment, especially equity investment, to fuel our growth, this is a chance to create a true virtuous circle in Europe. This is how we can ensure that our citizens don't just observe the economy, but actively participate in it and directly benefit from it. In closing, I want to thank the organizers for inviting me to speak here today. Before we move to the panel, let me leave you with one thought. Take ownership of your financial literacy journey. No matter your age or experience, there is always more to learn about how to save, how to invest, and how to make informed choices for your future. Financial literacy is not static. It evolves as our markets and technologies evolve. Staying curious and engaged is the best way to stay empowered. Because understanding finance is not only about managing money. It is about gaining confidence, independence, and the ability to shape your own future. This is our shared responsibility for ourselves, for the next generation, and for the strength of Europe's economy. Thank you.
Thank you very much, Commissioner. I will now turn to our two panelists, starting with you, Denise. You chair our investor education platform. May I ask you to comment on what we just heard from the Commissioner?
Thank you, Tanguy, and thank you very much, Commissioner Albuquerque. I completely agree with everything you just said. So from a personal perspective, as well as from my position as chair of the EFAMA Investor Education Platform, I think that the strategy, the financial literacy strategy, is an exciting initiative, and I do believe it can make a significant difference in the lives of EU citizens. I'd like to highlight the first statement in the strategy, and actually a statement that you made as well. The financial literacy is an essential life skill. And I think that it's really important to look at financial literacy this way versus something, for instance, only the rich need to worry about. It's a life skill that we all need. And it's really, as you say, fundamental to empower citizens to ensure their own or their families' financial well-being, including, of course, retirement. Financial and as Tanguy mentioned, financial and investor education has been a focus of EFAMA for quite a while now. And unfortunately, we've seen little movement over the years in terms of the low levels of financial literacy that was noted in the strategy. Basic financial concepts such as the impact of inflation on savings, the power of compound interest to grow investments over time, and then the benefit of diversification are just a few, but are little understood by citizens. As such, the strategy's 4 pillars of action, I think, are very timely and very welcome, as a path to increasing EU citizens' financial literacy. I like what you said, confidence, and as well as the resilience. Of course, as you mentioned as well, while growing Europe's capital market. One of the 4 pillars I just wanted to point out in the strategy that is the importance of coordination and best practices. As you mentioned, there are many best practices out there already, and including best practices that arise from national strategies on financial education. But I think that's really been at the heart of what the EFAMA Investor Education Platform has been doing for a number of years. For instance, we have EFAMA member national associations that have undertaken initiatives, such as setting up programs to train secondary school teachers about basic practical financial concepts. For instance, to help school leavers understand to create a household budget, or to understand what is car insurance and how does it work. You mentioned the national programs, the EU member state national strategies for financial education. For instance, we've seen examples of programs that are for the workplace that explain to employees how do pensions work. So these are practical programs guided by experts from different parts of society. And ideally, of course, as you mentioned in the strategy, or as mentioned in the strategy as well, these could be used as examples for other member states. How to set up these programs, what went right, what went wrong, how do you measure the effectiveness of the programs? And then maybe just one final comment. Investing is more often than not seen as very complex, and where one might need to or must be rich to invest. So in addition to raising the level of financial literacy, I think aiming to simplify the investor journey as much as possible, while ensuring, of course, investors are protected, could also help achieve the objectives of the Commission's financial literacy strategy. Thank you.
Thank you, Denise. Micaela, any comments?
Well, first of all, thank you, Commissioner Albuquerque, for such a strong policy statement and strategic vision. Financial literacy is more than a policy goal. As you said, it's practically the enabler of investor confidence and as a consequence of long-term financial security. As an industry, we have a responsibility to make financial concepts more accessible and more actionable for individuals in Europe, especially, as you mentioned, retail participation needs to grow, and also investment landscape is evolving very rapidly. So according to the Commission, at the last Eurobarometer, nearly half of the EU citizens lack basic financial knowledge. This is obviously concerning and directly affects the ability of EU citizens to make informed decisions and to engage meaningfully with investment opportunities. Investment is perceived as complex, investment is perceived as risky, which is not always the truth, and that needs to be explained very well. So this issue sits at the heart of EFAMA's advocacy and what Tanguy and Denise mentioned. And at the heart of the EFAMA's advocacy is also a more inclusive and a more competitive investment environment. So the European Commission's financial strategy launch, recent launch, is this important milestone, in my view. It's also a starting point. In my role as the head of a large European investment company, and also in my new role as the vice chair of EFAMA, I see firsthand how collaboration between the industry and the policymakers can drive meaningful change. And to truly embed financial literacy across Europe, we have to continue to invest in education, in innovation, and I heard in your comments also shared commitment. This needs to go across all stakeholders. And bringing it one level more practical, you know, the best investments one can make is generally to improve literacy, but in our topic today is to improve his or her financial literacy. We need to raise the people awareness on impact of inflation on returns, pension gaps, the risk of not taking risk, the risk of not investing for the future and not knowing how to tackle savings, budgeting, investments, basic concepts. So this idea of financial literacy is not really, in my view, to turn an average citizen into a financial analyst. We will still need advice. Advice must be accessible, must be affordable, and have high quality. And this must go hand in hand from the point of view of the investor community, also with the simplification of the customer journey, because what is perceived as complex is also deemed risky, as I mentioned a moment ago. The pension gap also must be a wake-up call to European Union citizens. Retirement will represent a financial shock for a lot of our fellow citizens, and we cannot leave them open to these shocks in the future, because we have the tools to avoid it through the financial literacy and also through recent focus of the European Commission on pension, for example, in the context of the SIU, the mention to the new saving and investment accounts. So this focus and this initiative are hugely welcome as well.
Thank you, Micaela. Maybe Denise, a question to you. You are from the US, as people may have found out by your accent. I mean, is there anything we can learn from the US? I mean, we know that the US, average citizen is far more invested in capital markets. I'm not saying that the US should be the model, but are there any lessons we can learn from the US?
Mhm. Well, I mean, I think that I actually, as a parent, I have also, and as an individual, I've been able to take advantage of that investment culture, which is present in the U.S. and it's present out of necessity because of, you know, the need for citizens to save for their own, invest for their own retirement and large purchases, etc. So we do have, there's much, obviously we have the employer so-called 401k plans with automatic enrollment and all of that, which is obviously a huge part of the savings for and investing for retirement in the United States. We also have, from the perspective of individual investing, we also have so-called regular investment plans, which I think are similar in fundamentally to the savings and investment accounts that are being obviously focused on now in the EU, where, you know, based on the simple signing up of creating of an account, having a regular money going into an account without actually having to think about it because you've actually instructed your bank to send that money or allow the asset manager to take the money from your bank account, you know, and doing that even starting with small amounts, $25, euros, what have you. This is really powerful because it gets people starting on the path to investing. If you can get people to start young, obviously, that is the ideal. As I did with my daughter and my 3 nieces, I basically told them that once they were 18, if they created these accounts, these regular investment accounts with an asset manager, that I would fund them, their investments. And that once they started working, they would have to agree to continue it. So, and I'm happy to say that actually it was successful. It also gave us an opportunity during that time, when between 18 and when they started working, to have discussions about investing. You know, what works, what doesn't work, the do's and don'ts, if you will, of investing. So again, I think it comes, what the US does have is this investment culture, which I think would be, you know, critical to be able to create, or in Europe as well. So obviously the strategy is a good way to a good path to start to do that.
Thank you, Denise. You mentioned 401k. I guess, you know, part of the success of the 401k is also the existence of tax incentives, right?
Yes,
But
of course.
I think now, Commissioner, turning to you, do you want to react to any of the points made by Micaela and Denise?
Thank you, Tanguy, and thank you both. Just very brief comments. This is indeed, I believe, a very positive strategy, and I think that when we look at success in other jurisdictions, and just going straight to the issue about the US, we do not want to provide the kind of incentive that comes from a non-existence of a welfare state. We very much want to preserve our welfare state, but we should nevertheless promote an investment culture. And that is exactly what we are trying to do with the savings and investments account, and with the financial literacy. And I also agree with some of the things you said about this concepts being actionable. That's why we present the 2 initiatives together. It is about knowledge, but it's also about putting that knowledge to work in a simple, well-framed context. We are trying to make the investor journey simpler. And we continue to discuss initiatives to get there, including on the retail investment strategy, which is now being discussed in trilogues with the co-legislators. And a very important part of what you said is investing is seen as for the rich people. And this is clearly for the many and not for the few. We make a very strong point that this savings and investments accounts should have no minimum amounts to be opened and to be invested. If people only have 10 euros, they should be able to put 10 euros to work, because that is also about empowerment and engaging and demonstrating that really you don't have to be rich to invest. Also, a very important content about a sentence about the risk of not taking risk. That is about creating this awareness that people may actually be losing money, losing purchasing power without realizing, by leaving their money just on bank deposits. So I think we're very much aligned, and I'm really very Happy to hear your words of support, and we will go, I guess, later to how all of us, both policymakers, sorry, the industry, absolutely everyone can and should contribute to what is a societal goal that will make us all better. There is no downside to this strategy. Everything is positive, so we should all engage. Thank you, Tanguy.
Thank you. So indeed, it is a joint effort. So we all have a role to play. Micaela, you are heading an asset management company, M&G Investments Europe. Typically, an asset manager may not be customer facing, but yet you are doing things in the investor education space. What are you doing as an asset manager? And what lessons have you learned along the way?
Yes. We are surely fostering financial education, and at M&G we have taken concrete steps to improve financial literacy across Europe. As you say, Tanguy, we are facing mostly, especially in Europe, we are facing intermediaries and institutions. So we target campaigns that we call train the trainers, and these then have a resonating effect on their clients. So building, for example, on our long-standing expertise in fixed income, we launched earlier this year the M&G Credit Academy. This training program to deepen financial advisors' understanding of credit markets and ultimately empowering their retail investors to make confident decisions for the long term. I was extremely pleased to see it launch initially in Italy, which is my country of birth, and the Academy is expanding, however, across the other key European markets due to the growing demand, and especially also an interest for insights in private markets. The Academy covers both public and private credit markets and offers practical tools to navigate complex investment environment. The modules, interestingly, are provided by our fixed income professionals, but also entrepreneurs. We invite entrepreneurs from invested companies to explore topics such as selection of bonds, creditworthiness of issuers, and portfolio constructions. And these are topics in which advisors like to go into more depth to be able to then train their own clients. The Academy raises awareness of the investment industry's role in financing the real economy as well. So how investments translate into economics, into the real economy we live every day. So the impact that each of us can have in putting the money to work and having the purpose to use investments for societal cohesion, for growth, for the improvement of the European economy. And this highlights also the need for education in this particularly strong evolving moment in which private investments have or are going hand in hand with public investments as well, and are made more accessible to a wider public. In the context of benchmarking and examples, I wanted just to briefly mention also as an initiative that we launched earlier this year. We launched it in the UK. It's called the Reframing Retirement Campaign, and here this is an initiative to challenge outdated views on retirement, and especially to promote starting earlier the pension planning. Our research showed in UK that 62%, so large majority of non-planners, people who haven't started planning for their pension, they won't start planning until age 40. 4.0. And this is risking what's generally spoken about the too little, too late generation. We also observe that the Generation Z is very financially optimistic, but often lacks the pensions or investment knowledge, or actually the investments for pension. And this highlights once again the need for early financial education. And maybe, Tanguy, something that we learned is also how we speak about this topic is extremely important. And I think tallies well with the financial literacy campaign, because we learned that using outdated terms like old age pensioner or senior citizen, this hinder engagement from the public. So we promote empowering language like freedom, next chapter, and engagement.
No, thank you, Micaela. As an employer, I guess you also have a responsibility. I mean, I certainly did at EFAMA in previous jobs. You know, we organized sessions to raise awareness, for example, of the pension tracking system that we have in Belgium, given that EFAMA's workforce is in Belgium. And I was surprised to see that very few of my colleagues knew about the pension tracking system. Likewise, many of us have the chance of benefiting from a second pillar occupational pension scheme. But again, very few of EFAMA's employees knew anything about the scheme and their entitlement. So we organized something for the staff. And I think that, you know, we can also do something at our level. So what are you doing, if anything, at M&G Investment Europe vis-à-vis your staff in terms of financial education?
Yes, at M&G, it's part of our purpose to make people feel confident about money. And in this regard, and also using a positive discourse, first of all, we believe that financial literacy starts with our own people. And secondly, we name initiatives in a way that also make people more attracted to them. We have a financial well-being series of sessions, in fact. They offer practical guidance on topics of every day. Tanguy, you mentioned not only importance of becoming investor savvy, pension savvy, but also more day-to-day topics, saving, budgeting, pensions, and again, obviously investing and providing for the future, for the families, for the opportunities that are out there for the citizens.
Also answer.
Helping our colleagues feeling more confident. I have a return on my voice.
Yes.
Yeah.
Someone should mute. Go on, Micaela. Someone should mute.
Yes. So we are helping our colleagues feel more confident. And it's exactly like you said, Tanguy, for the EFAMA colleagues. It's the same at M&G. We want the colleagues to feel trusting their financial decisions, and to do that, to know better what it is about and what they are doing. The sessions are open to all employees globally. They are designed to be clear. Again, language matters, engaging, and also tailored to different life stages. I think as part of EFAMA advocacy, as well as the European Commission strategy vision, different life stages need different interventions. From a point of view of an employee, it's early career to retirement. So we do target different age and life stages, different needs come with them, and we do it so that everyone can benefit. Ultimately, by investing in our people's financial knowledge, we believe that we are not just helping them to plan for the future, but we are building the culture of confidence and building a culture of confidence in investing, and we are building a culture of care that reflects also who we are as an employer.
Thank you, Micaela. Denise, you have been very active in the investor education space for many years. What lessons have you learned?
Well, as we were chatting a little bit in preparation for this call, I mentioned the fact that, so in 2014, EFAMA put out its first guidelines on investor education initiatives, sort of obviously setting out best practices. And I remember at 2014, when speaking at conferences or really to anybody, I was used to seeing people's eyes glaze over when we talked about financial education or investor education. But fortunately, perseverance as well, and I would have to say, Commissioner, as well as the Commission for Financial Services and the support of the Commission for Investor Education, we've come a long way. I think that there's still a lot to do, but I think the awareness of the need for financial literacy, financial education, and investor education is, at least in many quarters, out there. There's still a lot of work to go. I think that one of the, for the investor education platform, we had the opportunity to sponsor, EFAMA sponsored a European Youth Parliament committee at an international session of the European Youth Parliament back in 2019. The topic was financial literacy in the context of retirement. So we spent a week discussing what's at stake, the pension gap, the demographic issue, etc. And it really became clear to us that financial literacy is a cultural issue, as we have been talking about, because it was surprising and actually worrying to hear that even after this week of talking about what's at stake, the issues, these very intelligent 15 to 18-year-olds still held the belief that they would be taken care of financially at retirement. So, we still have some work to do. And this is actually what inspired, I think, the platform to focus on first-time investors. So we've come up with a couple of digital brochures, published 5 tips to do more with your savings. And then the most recent one, which was 5 questions on investing to build wealth over time. And what was nice about that is we actually interviewed some consumers and got their thoughts on investing, including one of the largest challenges, which is holding strong and not trying to time the market, if you will. I think also one of the big challenges, of course, with this whole topic is that it's a long-term project, if you will, for everyone. And we're not necessarily very good these days at long-term. So I think that's another important element that the strategy hopefully will be able to message, if you will.
Thank you, Denise. You mentioned, I just want to react to what you just said about this being a cultural issue. I think it's also an issue, and this is a point made by Sean Berrigan very often. It's also a question of there being the right incentives. I think that it's cultural, but if we raise awareness via a pension tracking system and all the plans that the Commission has for in the pension space, and at the same time we put in place at the member states level the right incentives, I think we can move the dial over time. Yeah. We have 6 minutes left, so I will now get back to you, Commissioner. You said it's a joint effort. What is the role that you foresee for the private sector and other stakeholders in the months and years to come?
Thank you, Tanguy, and thank you for your comments. I'll get to your question. I do think this has to be a joint effort, but maybe I'll take the words you mentioned before about this being culture. Yes, it is a cultural issue, but as Denise pointed out, the culture in the US comes from the need, but it was also promoted with incentives. But what we can see is that, or I believe, is people are fundamentally the same wherever you go. So you give them the opportunities and the incentives, and they will follow those opportunities and those incentives. And that is what we are trying to foster here. We are very much committed to having member states engaging in these strategies by having these savings and investments accounts set up. We do hope that they will follow this recommendation. It is indeed in the best interest of their citizens, their individual economies, and obviously for Europe as a whole. We're not going for a legislative proposal because the relevant part is actually, or one of the most relevant parts is about tax incentives. We couldn't legislate on that anyway, and we would risk upsetting some of the existing cases which are very positive, and we want them to continue to be good. On the role of the private sector. The private sector does have a responsibility and an interest. We all benefit from having better informed citizens. They will engage better. They will be able to know how to protect themselves from fraud, from scams, how to make better decisions. It's also about citizenship. The more informed we are, the better we can exercise our rights as citizens. The more informed we will be about the pension gap and how we need not only to protect ourselves individually, but also have our governments respond to this challenge. Actually, the Commission is coming with a recommendation to develop Pillar 2 pensions in the many member states where they don't exist, because this is a big problem for the future generations that people are not necessarily aware of. Also for the development of tracking systems and pension dashboards, so that we can also know who's best in class and what should we try to replicate. The strategy in our case is very much, we're not trying to reinvent the wheel. We know how things are working well in some jurisdictions, including inside the EU. So let's take those best practices and try to replicate them, understanding that there are different circumstances, but trying to give to all our citizens the opportunities that doing the right thing actually means. And it's about awareness, it's about education, it's about day-to-day decisions, understanding taxes, what we pay, how we pay, what we pay for. This is all a broader concept of financial literacy, but also being very targeted for the needs. Of course, in this conversation, we talk a lot about investment and what people should choose as investors, but sometimes we need to take a step back. Before investing, people need to learn how to save. And actually, in some cases, people don't even know how to manage their money to make it last till the end of the month. And it is our joint obligation to help them to do that better, because they will have a better present and future life. And yes, also telling people that they should take a longer term perspective, because we all expect to live longer. So that alone should lead us to think that we should take that longer term perspective. And as you said, Denise, if you start early, a little money can go a long way. And that's also the message I pass on to my own children. So I count on everyone to be involved, because it will benefit us all, industry included, to have better informed citizens and investors. And I also make an appeal to those more engaged into the protection, the usually called consumer protection, to talk about investor protection. People in this context are investors, not consumers. And I do think that words do matter in this case. Thank you very much, Tanguy.
Thank you, Commissioner. We promised to let you go at 12:45, so I will conclude here. I would like to thank you again for the opportunity to engage with you on this key issue of financial literacy. I think the case for improving financial literacy is very obvious, if only because of the rising pension gap in most of our member states. So this will be, as you mentioned, a joint effort, and EFAMA is very keen on supporting you in your efforts, as you know, as we did in the pension space. And this will be our next event. We will be organizing, in the context of the European Retirement Week at the end of November, an event together with other trades to raise awareness of the pension gap and the need to take actions. But from now, thank you very much to everyone, to Denise, to Micaela, to you, Commissioner, and let's make it a success, and hopefully we can, reconvene in a few years and measure progress made. Thank you all. Have a nice day.
Thank you. Thank you. Have a nice day, everyone.
Bye.
Thank you.